Dive into the dynamic world of entrepreneurship, innovation, and business with Caplander, hosted by Jody Thielander and Morgan Thielander of J. Thielander Consulting. Whether you're invested in the private capital markets, building your own venture, or curious about the entrepreneurial spirit, this podcast unpacks the latest trends, insights, and opportunities shaping today's market and the people driving what's next. Caplander connects the dots between personal and professional life because how you do anything is how you do everything. Featuring expert guests, deep discussions, and a dynamic mother-daughter duo, Caplander is your go-to resource for staying informed and inspired. Hi, Jody.
Hi, Morgan. How we doing over there? How's that baby growing?
Baby is growing for sure every single week, just truly getting larger.
Well, I was thinking, as we are discussing your impending having a baby and, trying to figure out your work-life balance, I was reading this article today about all these wealthy people who have had, they were multimillionaires and billionaires and what happens to their kids.
I
And they
saw this.
now you see this, and they said a growing number of families are grappling with how to make sure that money doesn't screw up their kids and the kids don't screw up the money as wealth at the top has exploded. Will they be able to handle money they'll be inheriting financially, emotionally, or socially? Can they thrive? And I would argue that you are in the best situation because you feel a little bit of pressure. And I stand by this that the pressure is healthy because it keeps you honest and it keeps you motivated. And you will never be one of these people where money screws up you or your kids.
From your mouth to God's ear, because my ass sometimes feels like it's on fire. So, because I don't like the pressure at all, and I think it's sometimes I like to get out of pressure in certain areas. I could take it in ways that I probably didn't hit as many of the pain points of it, but I don't like the feeling of it at all. It's not comfortable in any way, shape, or form. But I guess it is that level of discomfort that does make you change and
Keeps you
evolve.
motivated, keeps you focused. So,
Yeah. Well, I
anyway,
know we have a longer episode queued up for today, but my one question for you is what are you thinking about the electric Ferrari?
well, I haven't heard very good things about it, and I've read a lot of different angles, and I asked somebody who has a Ferrari, "Would you drive this?" Not to mention the price tag is like $400,000.
$600,000. No, it's
Yeah,
expensive. It's even more.
more. Yeah, it wouldn't be me. I mean, they basically are trying to make it sound like it has an engine, which I don't understand it.
Well, that's how any electric car is that there is no actual motor sound or engine sound. It is a synthetic noise so that
Yeah,
if you're walking down the street and you're like looking at traffic to cross and that way you
right.
can hear that there's a car coming. But
Yeah, I don't
I think all these things from a manufacturing standpoint are so tricky because you have to start doing this years and years and years ago. So where the EV vehicles were 5 years ago is very different than where they are now because
I think
obviously
they're not in as strong of footing it. They are not even seeing that it's making that big of a difference.
they're not, and people are moving away for it, especially when there's options like hybrids that do not require you to plug in, but you still get the benefits of having more gas mileage.
Right.
So,
Yeah, I vote no on that.
yeah, so you're not going to take yourself to the Ferrari dealership again, electric Ferrari. Okay,
That's the last
noted.
car that I would get no matter how much money I had apropos to our conversation. So that would be a hard no. And also, I want to hear the throatiness. I'm a tire person, the engine, all of it working together, in balance. I like the idea of this. The electric car, you're sort of like, where's the car part?
Yeah, I can understand. Well, talking about money and innovation and the whole kind of what is going on in the ecosystem, we have an exciting guest today who's Chris Harvey, who is a venture capital fund lawyer with 17 years of experience who leads Harvey Esquire, which is a Los Angeles boutique firm focusing exclusively on emerging fund managers and capital allocators. Hello, Chris. Welcome to the Caplander podcast.
Thanks, Morgan. Glad to be here.
Chris, you are our first venture lawyer in a minute to join us who really specifically focuses on emerging managers and fund formation. And some people in our audience are going to know exactly what you do. And then there's going to be some people who are listening for the first time who have absolutely no idea what
No
you do,
idea.
but are curious to learn more. So tell us who you are and about your practice.
Yeah, so I am a venture capital lawyer, as you mentioned, specifically on the fund side. So this is a very unique, very niche kind of practice. We work with mostly emerging fund managers. Those are VCs that are really on fund one, fund two, and fund three, and those that are raising anywhere from up to $200 million, give or take. And so, yeah, this is something that kind of like came into fruition about I don't know, maybe 10 years ago, and I remember when I made the decision to get into the venture capital fund space, it was kind of a unique opportunity because really there's most of the funds today have kind of come from like the world of like the cottage industry of venture capital, which is like
Right.
this kind of like unique industry, as you guys don't know, right? But the emerging fund space is something very like new and kind of different. And instead of
How
setting up shop
so?
in like,
Yeah, explain that. How would it be different?
Well, Morgan, I want to answer. I mean, I want to capitalize on something that you were saying, Chris, because I think the venture being a cottage industry was really true, maybe even as 15, 20 years ago. But in the
exactly.
last at least decade or so, decade ish, venture has become more of a career track. And I think in part because the returns are taking so long and there's so much innovation, even like now with AI and the first to an IPO, there are many iterations of how venture goes. And then
Yeah.
venture has also turned into PE because they've stayed so late stage that they've moved into this quote growth capital. So it's no longer really just a cottage industry. And it is, even as we're living today with folks coming out of these AI companies with wealth creation, some of them become investors, and the ecosystem goes right, like the circle of life turns right into then being emerging funds.
Yeah, absolutely. And it's kind of like I would say the fund space is grown up a lot like the startup space.
Right.
And they're just like 10 years like behind the startup space, right? And so really, yeah, like you said, it used to be the cottage industry where you have partnerships. Everyone was kind of either an equal partner or they'd have, some rainmakers. Uh, and then it became big VC where, the Kleiner Perkins of the world, the Excels of the world really started taking market share, investing in Facebook, some of these bigger companies, startups that came out of 2000, post.com breakups.
Right.
But
I've lived through that. I mean, you talk about Kleiner Perkins. I know Kleiner Perkins, Caulfield Byers. Like Brooke Byers was a mentor and was somebody with whom I worked and did deals and who was a longtime colleague. And now I say this to Morgan all the time because she's building new relationships. And I'm thinking, you're the future. And so are you, Chris, because at a certain point, everybody I know is either retired or, something's happened. So you've got to keep, building up the rear.
yeah, for sure. And yeah, and so like I mean in 2008, 2009 we started getting like the new, I would call it like the not modern VC, but like the new iteration of the evolution of the VC, which is really what A16Z brought to the table. And Andreessen Horowitz is kind of the prototypical like let's throw a lot of resources on each startup. Let's invest big. Let's think like let's not think of what the industry is today, but what it could be in 5 to 10 years, and make
Right.
bets on that. And so it's interesting because we're kind of coming full circle in the sense that these bigger VCs and also the modern VCs are becoming fund to funds. So a lot of my clients are taking capital from these well capitalized, multi-billion dollar, multi platform VCs, including A16Z, Sequoia Capital. All the big firms actually have fund to fund shops.
Right, because they've gotten so big that maybe they don't have the resources for this emerging area in that same innovative, agile way. So they're better off to invest in teams that they think could be doing it better than they even want to.
Exactly. Yeah. I mean, they can't be everywhere all the time. So the purpose of the emerging VC is really to capture uh, inception stage companies. That's part of it, right? Inception stage companies, meaning either before startups have formed, or like at the moment they formed, they now have a check, a person that can write a check, a firm that can write a check, typically. And these are maybe smaller check sizes, obviously a lot smaller than the big shops are putting into it. But there's also some space in terms of, like, what industries are coming into fruition, right? So space for a long time has kind of been this thought of as like an afterthought, like, oh, cool, it would be cool if we go to Mars one day, right? Like not in
Right.
our lifetime, but maybe, right? But now, like with SpaceX going public this month or next month, and a lot of space activity kind of really coming to front and center, you're seeing a lot of people jump into the space industry, and those are oftentimes emerging fund managers who are jumping right into it.
I see a lot of these emerging funds getting into areas where maybe other people aren't comfortable, but they feel like that's what we're here to do. We want to be creative and innovative, and we don't have to play by anyone else's rules because we're buying in heavily into that risk reward mindset.
Certainly, and a lot of the industries that start to come out start to look kind of like, ah, that doesn't seem like a good idea. Like space 5, 10 years ago, I remember doing SpaceX deals 7 years ago. And I remember actually saying to this to the LP that like, this seems kind of like a novelty bet. Good luck with this. We'll
Right.
see where it goes. Fast forward today, it seems like a brilliant investment decision 7 years ago.
Really?
And
You
I
think
think that
so? Would if you had the chance to buy SpaceX shares before they do go public, would you do it?
7 years ago, yes, absolutely. That would be a good bet. That would be a really good bet. Today, I don't know. Is it worth $2 trillion? Who knows? But that's,
It's even like
you know,
Bitcoin. I mean, at a certain
yeah,
point, we know that, well, I mean, how much do you even carry cash anymore? You don't,
yes,
right? So my
100%.
Bitcoin stock is down, but I'm holding on because I feel like at some point, cash is going to be gone and there's going to be different currencies and we're going to use it.
Absolutely, and this is the abundance mindset, right? This is what the new VC brings to the table is they think that if everything like they don't ask what could go wrong, but if everything goes right, what could go well,
Yeah.
right? So those are the questions they're asking, and those are kind of this is the interactions I have with my clients because for just like for a lot of startup founders, you have to put on rosy glasses as an emerging fund manager to think that this is all going to work out well. Um,
Right.
and I mean, it's just an interesting space because you kind of have to believe for it to become true.
Right. Well, that's also part of it where obviously we're a compensation data and consulting firm. So we see a lot of that rose colored glasses being tied to the carried interest piece of it because you have, especially on the emerging fund manager side, where because we look at a lot of compensation data by total AUM. You can also look at it by the size of most recent fund, which has been something we've been doing a lot on the consulting side for clients lately. But if you look at an analyst, associate, senior associate at a fund with less than 250 in AUM compared to 2 billion plus, their comp looks different in the sense that they have less cash, but they have more carry. So when they're looking at these deals and they're looking to invest in companies, they are very I would say they've got skin in the game because they're like, not only am I willing to put the dollars behind it, but I believe in it so much so that I think there will be a return. And that's really where the wealth creation can come in. So, what do you see about that in your practice, or how do
Yeah,
you
well, how
deal
do
with
you tie into the compensation when you're advising these young firms? I would think at a certain point, you're like, you have to set up this fund structure, which includes setting up the cash and the carry.
Yeah, I mean, it's seems like it's a unique negotiation with each client. But I will say, there's several things that I come back to, and obviously while we're talking, one of the reasons why we're talking is because I reached out to you and thought that what you guys are putting out there in terms of benchmarks and in terms of like information flow was very helpful for my clients. And if people on this podcast haven't listened to or seen some of your comp surveys and structures you've put out there, I'd highly recommend it because it's actually informed my practice and more importantly, my clients' negotiations. And so, what I mean, I just off the top of my head, I was actually dealing with this earlier today where the client was saying, how much time value do we attach to the carried interest component?
I mean, for
And
vesting,
for vesting, yeah, for vesting more importantly. And Morgan, you mentioned earlier that these startups are staying public a lot longer. I mean, this is
private
right,
much longer.
or yeah, private. They're saying private. They're not going public, rather.
Right.
right,
Um, we're seeing this across the board, and it's really it's pushing where we otherwise would see maybe lower vesting schedules, or it's pushing the vesting schedule. And we've seen it on your data,
Yeah.
where 10 years is the most
longer,
common vesting, yeah, or longer,
right,
right?
right.
And yeah, not everybody's caught up to that yet. Not everybody understands that, where the current structure is today.
Where do you see, because obviously, I mean, you're a lawyer, right? So I mean, and AI is just everywhere. It's gobbling up venture dollars. It's secondaries are completely going off the charts and becoming popular, especially talking about companies staying private for longer. Like the whole private market ecosystem is evolving, and we're kind of in the middle of it now. And you referenced the dot-com bubble boom and bust, but where are you seeing AI coming into play with investors and with LPs in general? And what conversations are your clients having with you, or what are they coming to you about their concerns or
In terms of
excitements?
their own firms, is that what you're asking, Morgan?
Yes, exactly.
Yeah, well, I mean, it's ubiquitous, meaning it's everywhere, right? AI is not just about what you're investing into, but how they're using it, what the future looks like, in terms of compensation for current and also headcount for future hires. So yeah, it's everywhere. I mean, it's hard to slice it on how my clients are perceiving it because again, it's everywhere. But one thing that comes up is the industries that are getting the most capital are obviously AI focused. Like I have a couple of food and beverage clients, and I think their entry price is like the lowest it's been in like a decade, 10 years.
In terms
And
of
the
being
reason,
an LP in that fund, a limited
yeah,
partner.
I know exactly. Well, it's a double edged sword, right? Because it's you get lower pricing, right? So you get cheaper stock,
Yeah.
but it's not AI typically AI frenzied. So on the polar end of that, I have clients that are in robotics right now, and robotics is embodied AI. And right now, there's no one's figured out embodied AI yet, right? There are some startups that are coming up. Obviously, there's Elon Musk with SpaceX and trying to focus on the robots, but no one in the U.S. has figured it out yet. So they're throwing a lot of capital. I mean, these are off the charts amount of capital, like top, 1 to 5% of all
You
capital
also
is
have
going into these robotic.
You
Yeah,
also have a lot going on, and you being physically in Los Angeles, you have a lot of defense tech who are using AI and autonomous drones and underwater drones, and also the next wave of military and defense spending is also looking very different.
yeah. One of the first funds that we helped out was a defense focused firm, and that was in 2017, 2018.
Yeah.
And at the time,
Not
it just
that
seemed like a
long
dumb idea.
ago when you think about
Yeah.
it. Only like it
Oh,
sounds like a
it's
long time ago, but not really.
It's just a
yeah,
lot has
but I
happened
mean, it
then.
was a contrary bet at the time. It was like you went to Silicon Valley, and a lot of people were like, "We're not going to touch this.
Yeah.
This just," and they weren't even doing like more, they weren't even getting into like the like actual military space. It was mostly just using this for both industrial applications as well as military. So they call it dual use. And
Yeah.
yeah, I mean, there's a complete sea change when it comes to like what people are actually interested in today, because AI was not a thing. This American dynamism was not a thing, and today those are like probably the two hottest industries, at least in my business.
How do you
Um,
feel like this has changed? I mean, we're always interested not only in compensation, but career tracks, how long
yeah,
people are staying in their roles. I mean, obviously, you're staying in your role, but you've pivoted. Very
yeah.
important, really necessary to be dynamic and fluid and moving around. This is Morgan, and Morgan's always smiling because I'm the best pivoter ever. And Morgan is always, read the same things and we digest completely different angles on it. So it's fun for us. But in terms of career tracks inside of venture, when you talk about A16 and how they were really, I think, one of the first, and I remember this because I lived through this, we also in our compensation data and surveys and consulting work very heavily with the corporate venture firms. So the investment arms of major corporations where they get the money from the parent company, whether they're a separate off balance sheet or they get deal by deal, however it's structured. And then but as part of that, they may have a double bottom line, like may want to have financial return, but in some cases they want technology transfer as well. But I feel like the VCs and in particular, Andreessen, when I would meet people at the corporate venture events who were coming from Andreessen and they were like business development roles. And that has become a whole career track. Now, the emerging funds putting that in as early too, do they see the reason for that?
Business development, maybe not quite as much. Although I will say that my clients are very often in the circuit of going to conferences. Like that's just part of the business. you can't really be a stationary VC. You kind of have to
No.
be on the move all
Can't
the
wait
time.
for the deals to come to you anymore. You've gotta get out there.
Got to get out there. And in fact, most people will say you got to get on a plane and go, shake some hands. And one of the biggest unlocks that people have said, I mean, this is across the universe, but uh, I think this actually happened at Palantir, as they said that um, they wouldn't close an enterprise sales contract without embedding, their staff in with the actual client. What they call forward deployed, right? Forward deployed engineers is the term that they created. Um, and
They
today, I
have
think you're
their
kind
they
of seeing
created their
forward,
own special word for it, just to make it seem
yeah,
like
which
it
is
was
really like a,
special.
a souped up salesperson. They don't say that, but like
Yeah.
Right.
salesperson who's armed with to do some coding, which is kind of what you have to do today. Is you have to be both technically adept, at least understanding the concepts, or being able to, push it through the AI to understand, but
Right.
also having the charisma and the ability to meet people and to shake people's hands, look them in the
Yeah.
eye, and close the deal because you kind of need both today.
It's really about that's where the founder piece come in. I mean, obviously, and I have more questions about your actual practice, which we'll get to in a second, but on the investor side of it, I mean, especially for an early stage investor, somebody who's at a smaller venture firm, it really is about these founders that they're putting capital into their companies or their ideas or whatever stage they're in. It's really about who the founder CEO is and their vision for the company, because at that point there really is no track record. You're like, okay, well, here's what I've had to do, but from being in this space, is there anything, because we have a lot of people who listen who are maybe a CEO themselves or a founder themselves, or they have a side hustle that they want to look possibly for venture funding in some way. So do you have any advice for that person in terms of when they're walking into the meeting with the venture capitalists about how to secure the dollars?
Yeah, well, I mean, there's books written about this, right? So, I mean, it's
Yeah, but you're
and
seeing it in a very, focused way.
yes, I was going to say that my angle is a little different because I'm not actually in those meetings, right? You can't be a stationary VC lawyer. You just can't be a stationary VC. So, oftentimes, I work close to home. I have co-working space. I can work at home, so it's very easy for me. And you mentioned that I was in LA. I didn't have an LA client when I moved here. I only acquired LA clients because they moved from San Francisco to LA. So it's a unique space to operate in. But to answer your question, um, you know, just I mean, it's a relationship game. When it comes down to it, you see, I mean, from the clients that I see that close deals, or not the clients, but really the portfolio companies that close the fastest, they always have a network, and oftentimes the best network is to be a CEO and to invest on the side. So I've seen, and in fact, I've seen a lot of clients that have actually they're solo GPs today, but they successfully founded a startup, and because they have a really good network with all their other CEO friends, that's something that's very valuable for a lot of for all VCs really. And
Yeah, a lot of
so,
people think what those are entrepreneurs in residence or they have other, job
Operating
descriptions or
partners.
titles. Yeah, exactly, inside of the funds.
yeah, but it's being able to kind of share resources, combine ideas, and maybe at first it's just investing on the side, just with personal cash, and not big checks. Oftentimes they'll take checks as little as $1,000 into companies that are very that are very hot in the Silicon Valley circuit. But the point being is, you can also start deploying capital as a startup founder, as a CEO, but still maintain your day job. And if the switch ever happens, and I think it's becoming more common today, it's a lot more common today, to either switch over to the venture capital side after accumulating enough bets to where you've proved the point you're a good investor. Now you just need to prove the point you're a good fund manager, which are two different skill sets. Um, or you stay on the CEO track and you continue to deploy capital checks into companies. And the funny thing is this is happening not just at the founder level, but it's happening in other industries. So I have a couple of celebrity clients who have been so successful at their startup investing just because they're well
Right.
known.
Yeah,
They've actually taken the venture capital role very seriously, or trying to become a VC,
yeah.
and almost like doing a career shift,
So does
which
that
I
mean
think
you're
you're going to see a
working
lot
with
more.
Serena Williams and Ashton Kutcher? Is that part of
No,
it?
no,
Because
no, no,
right?
not those two names, but people on that level, who like would
Right.
be well known, famous, um, who are just love the game of investing, and more particularly
Well, and I think
love
they're
venture capital.
also, really competitive, and they had success in other areas, and they sort of feel like they could parlay the success from one area of their life into another. When you think about your own firm, separate and apart from the type of clients that you have, do you have employees, or how have you built this?
So yeah, I mean, so it's been about 12 years since I've had my firm. I've been practicing law for 18 years. So I've gone through the ups and downs. Like I came out in 2008 to practice law.
Right.
And so I couldn't find a job in VC, even though that's what they didn't call it VC at the time, it was entrepreneurship.
Yeah.
And I really wanted to get in that game. But so I was stuck in a litigation firm for 4 years. When I got off on my own and hung my shingle, I started working with founders. And that's because that's who hires, someone who's freshly out of law school.
Yeah, they feel
And
like you're all risk takers, why not do it? Yeah, if you haven't developed bad
exactly,
habits, but you're hungry enough
exactly.
that you did it, so they respect that.
100%. And beggars can't be choosers. So, it's a good relationship. And um, I'd say that I cut my teeth really on my own with startup founders. I grew my firm over time. Had some layoffs and had some headcount. I think in 2020, well, 2020 hit, and I thought this is the end. Like the VC industry's done.
Right.
And instead of like going down, I just went straight up. Right, hockey stick growth. It was around that time that I met my now quasi business partner, Alan Gutterman. He'd been at Cooley. He was an original partner of Cooley. He'd been there for a decade or more. His first two associates were Mr. Gunderson, Mr. Detmer. And so I figured, like, if he could teach them how to do it, he could teach me how to do it.
Yeah.
And
For those
so,
of you who
uh,
don't know, Gunderson is a very well-regarded firm as well, and it just shows you how incestuous all of this.
oh,
So,
100%,
yeah,
100%. But also, it's a learning game, right? So you have to kind of learn from somebody else. Just how VC industry used to be a cottage industry. Legal is still relatively. I know it seems like there's a lot of lawyers out there, but on the VC side of it, it's just like it's
Not
a pretty small group. It's a pretty
Yeah,
small
and it's
group,
a
right?
very elite group because like what you're talking about, your clients and the level of sophistication of the firms themselves is very high. And what it takes to not only be a successful emerging fund manager, but then also to grow the firm to eventually, have more funds and have more capital under management, then it's not you either have you're either good at it or you're not, and if you're good at it, you raise more, and if you're not, you don't it doesn't last because the
Yeah, it's
LPs won't continue to give you capital.
that's true. And in the venture capital game, it's a particularly sticky, right? Performances, and I guess that's true also in VC law, right? So if you're not very good, you're not going to get repeat business, right?
no, and
And
word
they're not going to
travels
tell all
fast. It's a tough
their
crowd
friends,
you're
their
dealing
colleagues.
with.
Yeah,
Yeah.
so you're kind of, and it's especially in the first few years, you're kind of an unknown quantity, so you kind of have to push through. But
Yeah.
today, I mean, it's so we lean heavily into AI. I don't really advertise it, but I tell all our clients, we are AI first. Um, we
Interesting.
manage, yeah, we manage probably, on a given month. I mean, last month I built 42 clients.
Wow.
We keep a very high volume, uh, but we do it at a very high level or at a high touch. So Alan is really good with financings. We do a lot of NVCA financings. So we're the venture capital firm is investing into the startup company, and in return they're getting preferred stock. Um, those are most portfolio companies are for the bigger firms. They're always going to be investing in the equity. When you go at Series C, that's like the first institutional check you'll take. That starts the process where the VC will come in and say, "I want to bet $3 million in your company and value it at $20 million post. I'll give you the $3 million, and you give me two things. One, you give me stock back, and two, a commitment that you're going to raise the rest of the round. So we're not the only investor in the company.
And the law firm is doing this?
The law firm's drafting the documents to
Oh, I was gonna say, 'cause
to accomplish
also,
it.
a lot of law firms, I don't know if this is any part of your strategy, but quote, back in the day, law firms would also take equity in companies in lieu of fees. Do you ever do
Oh yeah,
that?
yeah. But I wasn't a VC, so it wasn't a very good business for me.
Right.
But I
No,
mean,
but the
to be clear though,
law
I had one startup that, two startups that exited. One that helped me put down my down payment on my house, so that was nice. And then second, just to get some sort of returns for having grinded for several years without, any major payday. It's kind of good to see, if you hit one or two, like that can make the 7 years of dry, you know, just working with startups, that can make it worth it. But it's also kind of
Keeps people coming back for more, right? Is that
yeah,
one, you
exactly.
gotta be
How
worth
do you
that
weather
sweet.
it? Like, how do you weather
Yeah,
those
how do you
ups
weather
and
it? Oh,
downs?
yeah. Well, that's the thing is like you kind of have to manage headcount. And so going through that experience, I kind of realized that the startup game, while it's definitely the most interesting, it's definitely the most fun, and like you get the most dynamic personalities, and I love it. It's just not very good to be if you're conservative, if you want to stay like stay sane from year to year, and if you want to like grow your
Yeah.
business without having to like hit those hiccups. So Alan and I made the decision we're going to jump into this in an emerging fund space because it's like, at the very least, these funds exist for 10 years. So it'll be at the very least, you got a client for 10 years. And then, as you grow your business, you can start getting ones that have been around for a lot longer
Longer.
than just fund one. Yeah. So
Well, you mentioned that
that's,
VCs, that you can't be a VC and stay in one place. You have to be on the road. And then the other piece about it is that you, it sounds like, are also on the road. So we ask this question to all of our guests, but are you a checked bag individual or are you a carry on?
oh, well, see, it's funny you say that. I'm actually not a well traveler since 7 years since I've had kids. So
Uh,
we're going to Spain in 2 weeks. I will definitely be checking a lot of bags for that. Um, But going up to San Francisco, the last time I did this, I have to check my bag. It just there's no doubt about it.
oh,
You're a
you're a
checked
check
bag
bag
person.
guy.
Yeah, I have to. I have to.
Okay,
Jody would leave you at the airport because there is zero shot in hell that Jody is waiting
can't
for your
wait.
bag to get off the baggage claim. Jody is out of there. Goodbye. That's it.
Or at least I'd have to go out and walk around, do something else, keep myself moving.
That's
Yeah.
great. That's awesome.
So,
That's
that's
awesome.
another g well, we have a couple other questions as sort of our go-to. So you've got kids and you've obviously, running the show and you shoulder financial responsibility. So how is that for you? Because I would think that your part of your compensation is tied to, the success of the business and how well things are going. So how have you weathered that over the years in terms of having a family and feeling like I don't know if you're the breadwinner, but I'm sure your income contributes to your household. What's that like in terms of your compensation and your stability and your ability to sleep at night?
Well, one of the reasons why I was able to go off on my own is my wife uh, has always had a full time job with a very large corporation, and so it's
Stability.
even though you got to have stability. You got somewhere in the life, you got to have stability, and she's been my rock, and so it's kind of allowed me to spread my wings a little bit. So now it's kind of like now the question is, where we're at in our careers. We have, our son just graduated kindergarten last week, and we have another one coming into kindergarten. So she's like, well, I really don't want to miss these moments, in
Right.
school. So now we're talking about moving back down to one income, and
I
so
would
yeah,
tell
it is
her, in case she's listening, or hopefully she'll listen, stay working. And the years where it's really important to be around is middle school and high school. That's where you can't outsource. And yes, you do get cute moments along the way. This is my experience, is
100%.
that later on, it's not about guilt anymore. It's just about the reality that your wife obviously sounds pretty sharp and she has multi hats that she wears. And I think the one hat as a mom, especially when you have some other business acumen and you really know your kids, that's where shit can really go wrong in middle school and high school, and you want it to go wrong while you still can have those conversations and impact it, because if it gets too far off track by the time they get to college, it's really hard to be, around.
Totally, you're totally right. Yeah. And it's kind of inspiring to see a lot of our kids' parents are also working parents, and it's just good to see that, teamwork together. It's a lot of teamwork, right? Because these are not these are fun times, but not definitely demanding. So it's good
No, it
advice.
is.
Yeah.
So because Jody gave you her advice, so one of the other questions we have is what is some of the best career advice you ever received?
Oh, well, I guess I would give you the anti-career advice. I was told by several friends from law school not to start my law firm, and just like sometimes I just don't listen and I just
Well,
plod
you risked
forward
it.
and
You took a
I
bet
risked
on
it. I risked it.
yourself. Right.
Yeah,
You
I risked it.
absolutely
Yeah.
took a bet on yourself, and obviously it's paid off in just from hearing about your practice and obviously doing this for 18 years. You're not around for 18 years if you're not if I mean your bet paid off. So how would you I guess maybe this could be one of our last questions unless Jody you have something else, but I mean, what would you give advice to somebody else who's listening to this, who's at the beginning of their career, who's weathering a job market that's evolving because of AI and the way the technology is changing, and say that this is their equivalent of 2008, maybe without the market crash?
Yeah. Uh, I mean, I would first of all find something you're interested in. I don't think you can get around that, but the three layers are, what you're interested in, what you're good at, and what the world will pay you for. And so, you're always trying to find that focal point. For me, it was spending a lot of uh, weekend nights and weekends learning about venture capital because I wasn't taught, from anyone else other than myself, and it's going down and doing the work yourself. Um, but also just trying to will yourself into something that you know should exist or know you can do, even when the world is telling you you can't. I think that's
Yeah.
that's an important trait is being resilient in the face of opposition because you're always going to get people tell you what you shouldn't do, what you can't do, but ultimately it's your decision, and so you gotta it has to be your decision alone, and you can't really rely on other people to make that for you. You can't outsource it.
There you
Yeah, you gotta
go.
trust your instincts. I think that's really important. And also, in some crazy way, the things that are hard for us, and I think Morgan asked some of these questions as well, because obviously being in a family business, and there are times where, we've done what you've done, which is not only gone working with the private companies. I hadn't really appreciated the parallels until you said it, but then we went into the investment firm compensation, the venture, the private equity, the family offices, and corporate venture, and all of that consulting too, because it is part of the same ecosystem, but you can't just be in one area because one may be going down while one is going up. And it's good to have multiple clients and revenue streams.
Absolutely.
Well, Chris, we're going to wind up. We took up, a good amount of your time and energy. I'm sure your billable hour was very generous with us today. So we appreciate that. And I hope you have a great time with your packing and your kids in Spain.
Thank you, Jody. Thank you, Morgan. This has been really awesome. Thank you very much.
Thank you for joining us today for the Caplander podcast. If you loved this episode, share it and make sure to subscribe to Caplander for more conversations like this.